Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, we always like to start with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we talk about today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. Before we begin, we always want to share our high probability trading course, learn-forex-trading.com. We have a great video course for you at a very affordable price that walks you through everything you need to be a successful trader, how to identify high probability trading setups. We have 3 series in this video course. First series is on the introduction. We talk about technical analysis, chart patterns, money management, the psychology trading. Then in the second series, we talk about the trading plan, how to choose one, what are the components that should be a part of it. And in the third series, we talk about specific trading setups. So plenty of content, plenty of information, very complete at a very affordable rate. Be sure to check it out. Any of you that have been with us for a while know we like to start off with a little quote or comic, and we've been sticking with quotes lately. Here we have one by David Russell that says, "The hardest thing to learn in life is which bridge to cross and which to burn." And so as we get to our content today and talking about Forex, why should you trade Forex? What are the advantages of trading Forex and over stocks and futures and other options investment vehicles? And so one of the hardest things is to take that time to back test, to document, to really ask honest questions about yourself, your availability, your strengths and weaknesses, so that you can identify what is the best investment vehicle for you and cross that bridge and burn and not waste your time with these other vehicles. So this is the second part of our video series on Explain Forex, and specifically we're going to talk about why you should be choosing Forex. What are the advantages of Forex? Once again, we're going to talk about what exactly it is and some interesting facts of Forex. We want to make sure you know what the major currencies are, and then we're going to talk about the specific advantages of Forex and comparing Forex to trading stocks. So let's begin. What is Forex? Well, it's the largest market in the world. It's where in the exchange market where we consecutively at the same time are buying one currency pair and selling another one. And this helps us give value to each of these currency pairs. Some interesting facts about Forex is, again, it's the largest financial market in the world, thus making it the most liquid market in the world. It's open 24 hours a day. And you'll notice that in most of those currency pairs, again, we're buying and selling a currency pair at the same time. You'll see the US dollar involved about 90% of the Forex transaction. In our picture here, we really document for you how big, how much volume is really involved in Forex compared to other forms like the stock market. Here we can see the NYSE $74 billion a day, where the Forex market is almost $4 trillion a day being exchanged in the Forex market. As we just said, the US dollar is involved in 90% of the Forex pairs that are traded each day, but the major currency pairs, the big 6 that most people talk about, are the US dollar, the Australian dollar, the British pound, the Canadian dollar, the euro, the Japanese yen, and the Swiss franc. Total, these currency pairs make up 85% of the trading volume. And of that 85%, again, 90% of that involves the US dollar. Thus, these are considered to be the most liquid currencies in the world. So, what are some of the advantages of trading Forex? Well, the bid-ask spreads are low. Thus, we have a low transaction cost. Many brokers actually give you what is called free trading, and that's a little misleading because what they're really doing is they're actually adding to the spread and putting your commissions into the spread. But what you're not going to see is this $10, $20 spread that you'll see in some of these stocks, or even some of our options have wide spreads. So there's the bid and ask spreads on most, especially our liquid and most popular currency pairs, are very small. And you'll see some brokers offering even tighter spreads because, again, they're trying to attract your business. the margin requirement, which equals leverage. In the States, you'll see 50 to 1. Due to regulations, they keep it at 50 to 1. Out of the States, internationally, you'll see up to 400 to 1. You can get involved in Forex as low as $10, $250, whatever it may be. And that low margin requirement is what, and the ratio of that leverage is what allows you to have control much more of the market. And we'll talk about this later. But the amount of startup to get into Forex is very low. Forex, as we mentioned earlier when we were talking about what is Forex and some interesting facts, is that it's open 24 hours. So if you're working during the day and you have a traditional 9-to-5 job, you can get involved. Now, keep in mind, there are volatile periods. There are periods where there's more volume than others. So, in the States, 11 p.m. may not be as good as 11 a.m. or 9 a.m., but it is open 24 hours, and the market is very liquid. Nothing like being in a trade and not being able to get out. Well, with Forex, because there's so much volume and such liquidity, you can get in and out of trades rather easily. And as we're talking about the volatility, volatility is the range. Many pips. In our what is Forex, we talked about pips and how that goes into factoring how much money you're going to make. Well, what's good about Forex is that most pairs average good daily pips. There's a nice range each day, and thus when there's that range, where there's that volatility, there for a day trader, you can get in and out of the market because of liquidity, because of the 24 hours, and be able to make whatever your daily goals are because of the volatility and the liquidity. Finally, you have the ability to trade in both directions. And I know, especially in stocks and some other areas, you can do that also. But you don't have to worry about some regulations coming in and changing that, where sometimes you have to worry about that in other markets. Whether or not they're going to put regulations in order to stop a down market, a bear market. Some countries, some financial markets have instituted rules to control shorting the market. So let's take this a little bit further and actually compare Forex to stocks. Now, as we talked about, it's a low initial startup because of the leverage. If you really want to make money in stocks, you need more money because you have to buy the shares. Yes, I understand options. The options is for another conversation. We're just talking about Forex and stocks. Availability. Again, Forex is open 24 hours. The NYSE, the New York Stock Exchange, is open from 9:30 to 4 p.m. Liquidity. You can get in the market because of all that volume. That 4 trillion volume allows you to get in the market. Some stocks have low volume. There has to be a buyer, there has to be a seller. That is the market maker's job, is to align those buyers and sellers. And if somebody doesn't want to take the other side of your trade, you don't have a trade. As we said, there's nothing like trying to get out of a trade and you can't. And again, you can go long or short anytime with Forex, and regulations keep changing with stocks. Let's take a closer look at that. So let's say we have $1,000 we want to invest. Well, with Forex, because of that leverage in the States, that 50 to 200, 50 to 1 ratio, internationally 200 to 400 to 1 ratio, you can control 50 to 200,000 shares of the euro dollar. Well, if you have $1,000 to invest in the stock market, well, that's going to get you about 3 shares of Apple. Right now, it won't even get you 3 shares of Apple. So if you get that volatility, you get 100 pips. Well, depending on your leverage, and we're going conservatively, well, that's going to get you $500 to $2,000 on that 100 pips. If Apple was to go up $100, which would be great, that's still going to get you no more than $300 if you have 3 shares. So a big move on Apple doesn't give you a big move to your portfolio. So that being able to leverage the Forex market to control more shares and take advantage of the volatility in the pips allows you to make more money in Forex when compared to stocks. So we want to thank you for watching our video. We have plenty of videos for you that you can find on Facebook, YouTube, and Twitter. We have a page on Facebook, Are You Financially Literate? And we'll move over Mike on YouTube and Twitter. We talked earlier about our great video curriculum. We also have a free course for you. It's on high probability trading. really helps you frame the market. We have 5 videos on what you should be including in your high probability trading. But again, anybody that been with us knows our philosophy. It's not about the system or the indicator, and that's why we're selling our system to you at a very affordable price that anybody can buy it, because we want to make sure that you understand that the true way to change your trading, to change your portfolio, to change your win-loss ratio is by developing a trader's mindset. And we can help you do that through our mentor and coaching program. We'll help you build that psychological capital so that you can pull the trigger each and every day. Thanks, guys. I'll see you next time.